From freefincal, and let's talk about investment risk appetite today. And I see many people in personal finance forum say, please suggest me something with medium risk appetite or high risk appetite, or they say I have high risk appetite, therefore I will have more of small caps, or I have low risk appetite. What is risk appetite? How do you define uh, risk appetite? Does it mean the ability to tolerate huge ups and downs in the market? Now, people who talk about high risk appetite 99% of the time are people who have never seen a market crash. It is like saying I will be brave. How can you say I will be brave? Bravery is an instinctive reaction to something that happens unexpectedly. We can only say I was brave or he was brave after the event has passed. So only when the market crashes will we know whether I was brave or not. I started in June 2008 and I have never seen a market crash so far. And today, most of the people, at least 2/3 of mutual fund investors today, are people who have just started investing in the last few years. They have never seen any major downward movement, and they keep saying, I have high risk appetite. The point is, appetite means wanting to eat something. We should not talk about appetite. Do we have high digestive capacity, a high risk digestive capacity? We should talk about, instead of risk appetite, we should be talking about risk digestion capacity. And people talk about risk profiling. See, SEBI mandates that investment advisors should do a risk profiling for their clients. They should find out how well they can perceive or handle risk before giving them investment advice. Now, this is nonsense, right? Say it's like giving a multiple choice question to people who people who have license. They will write something and they will do something on the road. They will break every rule on the road when they actually drive. But when they take the quiz, they will suddenly become logical. They will suddenly turn on their thinking cap and choose an answer. So there will be questions in the risk profiling like, what will you do if the market falls by 20%? Will you run away, or will you stay put, or will you invest more? People, because they're thinking logically, they will say they will invest more or stay put. Very few people will say run away. But when the actual 20% fall happens, how people will react, we do not know. I do not know my risk taking ability. I do not know my risk capacity. To be frank, that is the answer. I don't know. Tomorrow, if the market crashes by 40%, and somebody yesterday asked me, how will it feel like that? So 2008, if another 2008 happens, 40% of your investments would go away. If that happens, how would I react? I don't know. The problem is that people who claim they have high risk appetite, not only have they not seen a crash, but they also believe that there will be a nice crash, then they will put money, and then suddenly it will move up, and then eventually they will get high returns. How is that possible? I mean, they believe that they will tolerate all this volatility because finally they will get high returns. So this is just complete nonsense. I mean, I think we should don't invest with hope in the markets. If you think I'm scared, see, the market has been moving up and up and up. Many people say there is no earnings, it's just moving up on hype. Yeah. If you ask me if I'm scared, of course I'm scared. 60% of my money is in the market, but what should I do about it? I don't know. See, if I just pull out and wait for it to crash, it may not crash at all. Things don't happen the way you want. This is not some screenplay to happen in a nice way. I don't know. People say PE is very high. Yeah, PE is very high. Market will there can be a fall. Yes, but how much will it fall? It can fall by 1%, it can fall by 10%, it can fall by 15%. I don't know. It can then start going up. We don't know all this. This is the problem. So, if you ask me if am I at peace? Am I so calm? No, I'm not. I am a little scared. Of course, I'm scared, but I have my plan in place. I have my asset allocation in place. I have my goal based risk management in place. I have talked about this previously in several of my videos. So I'm a little okay, but if you think I'm completely relaxed, no, that is wrong. It's like I made this example. I wrote this example today. It's like a parent, right? You want your children to go out and be independent in the world, but until they come back home, there's a little bit in your stomach. No, that's a little, you feel a little scared in your stomach. Only when they come back home, you feel it's like that. Being investing in the stock market is, you'll always feel that little thing in the stomach. You should be scared. I don't see anything wrong with it. I don't know my risk appetite. I think we should not be claiming that I have risk appetite, large risk appetite. So I will invest most of it in large caps. Be ready to face huge losses from the markets at any time. I'm not saying market is going to crash now because of these reasons. I don't know. I have no idea what the market is going to do. It can throw up a lot of surprises and make fools of all experts who make predictions. So I don't want to predict. It's the safest answer is I don't know. And the best way to insure ourselves against such a loss is to get used to it, is to understand and be ready for it. Of course, when the crash actually happens, I have seen many people start cribbing even at 1%, 2%. Actually, when it comes to the market, the problem is not big crashes. The problem is when you have no returns for 2-3 years, and then people start cribbing. Oh, equity, they told me I will get 18% return, 15% return. Well, that's how it's going to be. So we got to get used to it. We do not know how we will behave when there is a big crash. I do not know. All I can say is I have a plan, and hopefully I will have the common sense to stick to that plan. If you think that you will get really scared and you will forget about the plan, then get professional help from a SEBI registered fee only financial advisor. I have a list. If you go to freefincal.com, right on the top menu you have financial fee only financial advisors link. You can click on that, get the list, and work with them. Hundreds of free fincal readers are working with them, and they're quite happy. Or you work with your spouse or your friend. Have a plan and work with your friend. Whatever makes works for you. So I think we should not talk about risk appetite. We should worry about risk digestion, and we do not know about risk digestion unless and until there's something bad happens, right? And so let's not take this risk profiling and all that seriously. Most long-term goals will require a lot of equity allocation. That is the desired asset allocation. How much we can handle the volatility associated with that asset allocation is something that only time will tell. When the market is moving up, everything will be happy. We all feel comfortable. But when there is a crash, or even worse, when nothing is happening, when the market is not moving at all, it will test our patience. Really, that is when we need to stick to a plan. Can we stick to a plan at that point? We don't know. Let's find out. If you're scared, yeah, that's the truth. I don't want to give you hope. What am I, some kind of guru to give you hope? You don't worry. You will go to heaven, and 16 virgins will be waiting for you. I don't know. I don't know. I am in the same boat as you are, and I'm also scared just as you are. So I have a plan. I've been sticking to it so far, and I hope I'll stick to it. Hopefully, stick to it when the market all crashes. Sometime it will. So let's hope for the best. I'll see you again in another video. Bye bye.